Well, let's begin this show by asking a very important question. Is India reviewing its crypto stance? Yes, according to a Reuters exclusive report, Economic Affairs Secretary Ajay Seth in an interview with Reuters cited shifts in crypto regulations across multiple jurisdictions as a reason for the change in India's approach to crypto regulations. Now, the status of cryptocurrency in India remains complex. In 2018, the Reserve Bank of India banned crypto transactions through banks. However, in March 2020, the Supreme Court reversed this restriction, enabling banks to cater to crypto exchanges. Still, unlike many major countries, crypto tokens like Bitcoin and Ethereum are not recognized as legal tender in India. The country also does not have a standardized licensing process for crypto operators. The RBI, under previous governors and the government, have repeatedly cited macroeconomic, financial stability and fraud risks for their stance. Now, is the Indian government's approach and stance changing as a result of the widening acceptance of cryptos like Bitcoin globally? Pro-crypto US President Donald Trump issued an executive order for a working group to explore digital asset regulations and a national cryptocurrency stockpile. In India, crypto investments have surged despite a strict regulatory approach. In 2021, India introduced a bill titled Cryptocurrency and Regulations of Official Digital Currency Bill. The proposal in its original form would limit private companies' ability while allowing the RBI to issue its own digital currency. However, the bill has not yet passed. A discussion paper on cryptocurrency was scheduled to be released in September 2024. And as per Reuters, that paper could face further delays as the government adapts to these global shifts in attitude towards virtual assets. India's Economic Affairs Secretary Ajay Seth in an interview with Reuters said more than one or two jurisdictions have changed their stance towards cryptocurrency in terms of the usage, their acceptance, and where do you see the importance of crypto assets. In that stride, we are having a look at the discussion paper once again. Now, the government is also poised to monitor crypto transactions more closely with the introduction of new amendments to the Income Tax Act. The Cointelegraph report shows that the new tax law in 2025 would penalize undeclared cryptocurrency gains going back up to 48 months with fines up to 70%. The changes state that virtual digital asset will be subject to back taxes and punitive tax audits in the same way that traditional assets like cash, jewelry and gold bars are subject to penalties for late declarations. The report also said that government data indicate that various crypto exchanges in India have outstanding goods and services tax, balancing which totals to 824 crore rupees or about $97 million. Binance, the world's largest crypto exchange, was fined 188.2 million rupees in June 2024 for breaching India's compliance regulations. And separately, the budget proposed a designated reporting entity to disclose details of crypto transactions. However, the budget did not make any changes to the crypto taxation policy. The 30% tax on crypto gains and the 1% tax deducted at source or TDS on transactions introduced in 2022 remain in effect. More importantly, no deductions are allowed. Taxpayers can now claim deductions for expenses or losses incurred while trading cryptos.